Hello guys, this will be first of many quarterly theory videos I will be posting on this channel. So today we're going to be taking a deep dive into Sequential SMT, SSMT, a quarterly theory concept founded by Trader Day. By the end of this video, you will know exactly how to spot Sequential SMT, how to use it, how to anticipate it, and much more. So in order to first understand Sequential SMT, you must have an understanding of SMT and also quarterly theory. So let's do a quick recap of both of those. What is SMT? SMT is essentially just a divergence between two or more closely correlated assets. So a closely correlated asset is an asset that moves in sync with a different asset. So if you look in the bottom right, I've listed all the main triads which you can use to compare to each other to look for SMT. In a bullish scenario, one asset will make a lower low, while the other asset makes a higher low. As you can see in the top right, asset 1 makes a lower low, while asset 2 makes a higher low. This is an example of a bullish SMT. And then for a bearish scenario, one asset will make a higher high, while the other asset makes a lower high. So now let's move on to quarterly theory quarters. So if you would like, you can take a screenshot of this page, or just take note of it. There are also many indicators out there which will mark all the quarters for you. I personally have my own quarterly theory indicator, which will be linked below in the description. Now you have made note of all the quarterly theory quarters, we can now move on to learning what Sequential SMT actually is. Sequential SMT is an SMT that occurs between two consecutive quarters. So for example, between Q1 and Q2, Q2, Q3, Q3, Q4, Q4 and also Q1. The only exception to this is within the weekly cycle, and that's on a Friday. So of course the 4 quarters within the weekly cycle would be Monday, Tuesday, Wednesday and Thursday. However, Friday has its own function, which is to return back to or as close to the true week open as possible. We will only see this occur if there is a weekly cycle sequential SMT between Thursday and Friday, or if we already got one between Wednesday and Thursday. We can anticipate Friday to be a continuation of that move. And you are also probably wondering if we can have a sequential SMT between Friday and Monday, and the answer to that is yes, as like I mentioned previously, we can just treat Friday like a regular quarter. Sequential SMT must occur with the highest high or the lowest low of the previous quarter. Now I know that a lot of people wonder which high or low to use within the previous quarter to look for sequential SMT, and the answer to that is you must be looking at the highest high and the lowest low. So to better help you understand this, you can go ahead and mark the extreme high and the extreme low of the previous quarter within all 3 assets that you are viewing. You then of course want to see one asset run below the high or the low, and have another closely correlated asset fail to run above its previous quarter high or low. Also, another question that a lot of people wonder, does the high or low need to be put in at the exact same time within the previous quarter across all the closely correlated assets? The answer to that is no. It does not matter at all what time the highs or lows are put in at. The only thing that matters is if we see one asset run above the previous quarter high or low, and we have another asset fail to run above its previous quarter high or low. Another very important thing that you have to be using when spotting sequential SMT is the true opens. We will get into detail of the true opens in just a moment, but for now all you need to understand is the true open is the opening price of Q2 on every single cycle. So you want to mark Q2's open, and you need to see price run above it and form a bearish sequential SMT when looking for shorts. And then of course when you're looking for longs, you need to see price drop below the true open and form a bullish sequential SMT. Why is sequential SMT so important, and why should you incorporate it into your trading? Sequential SMT literally tells us when price is ready to reverse or expand. The reason why it tells us when price is ready to reverse or expand is because whenever we have a sequential SMT within price, it's very likely that we will see a reversal or distribution occur. So let's say, for example, we form a sequential SMT between Q1 and Q2. We can then expect the following quarter, being Q3, to expand and give us that distribution from the prior sequential SMT. And whenever we form a sequential SMT after an expansion quarter, we can anticipate price to reverse back into that range. You should only be looking for a trade if sequential SMT is present, because if we don't have a sequential SMT, price will not expand or reverse. Sequential SMT confirms market profiles. So as you guys probably know, most market profiles will either be AMDX or XAMD. Now X means continuation or reversal, A means accumulation, M means manipulation, D means distribution. A lot of people think those are the only market profiles that we can have, but that is completely wrong. Market could literally do anything, and it all comes down to the sequential SMTs that form to confirm that. So for example, we could be dealing with accumulation within 2 quarters back to back. We then may see manipulation in the 3rd quarter, followed by distribution within the 4th quarter. So that of course would be AAMD. Now this will be confirmed if we see all assets take out the previous quarter high or the previous quarter low, therefore not forming any opposing sequential SMT. Sequential SMT also confirms bias. If you have a bullish weekly bias, and then we see a bullish weekly cycle sequential SMT between Monday and Tuesday, we can then anticipate Tuesday to be low of the week, and that would confirm our weekly bullish bias, and that would also give us the bias for the following day, being Wednesday, anticipating distribution followed by the manipulation. So again, Monday accumulation, Tuesday manipulation lower, followed by Wednesday distribution higher, and this is what a regular candle will look like. You will see the candle open up for manipulation, and then you will see distribution followed by the manipulation. Okay, so now you understand how powerful sequential SMT actually is. We can now get into true opens in a little bit more depth, because true opens are very powerful in helping us spot real sequential SMT and fake sequential SMT. So a true open is always the opening price of Q2 on every single cycle. When bullish, you want to see a sequential SMT below the true open. When bearish, you want to see a sequential SMT above the true open. It's very important that you view and mark the true opens on very specific time frames. So the time frame alignment which you should be viewing the cycles on and also marking the true opens on are in the bottom left. So feel free to screenshot those again. The T stands for true, the middle letter stands for the cycle, and the O stands for open. So for example, the true yearly open, the true quarterly open, true month open, true week open, true day open, true session open, and true micro session open. Those specific timeframes are the timeframes that you must be on when marking out the opening price of that Q2 candle, and also you must be on those timeframes when viewing that cycle. So when viewing the daily cycle, for example, you must be on the 15-minute time frame, and you must also mark out the opening price of the Q2 15-minute candle. The true opens are essentially our way of spotting time-based premium and discount. Whenever we are above a true open, this means we are within a premium. Whenever we are below a true open, this means we are within a discount. Now another concept is stacked opens, and it's super simple to understand and also very powerful when you apply it to your trading. Essentially all it does is tells us when we are within an extreme premium or within an extreme discount. And all we need to do is look at 2 true opens. Whenever we are above 2 true opens, we are at an extreme premium. Whenever we are below 2 true opens, we are at an extreme discount. So in the bottom right, you can see the stacked opens alignment, and I'll go through 2 examples with you guys now. Let's say we're looking at the daily cycle. If, for example, we're trading at an extreme premium on the daily cycle, This means we have the true day open above the true week open, and if we are trading at an extreme discount, this means we have the true day open below the true week open. And now if we see a sequential SMT form on that specific time frame, you can expect that to give you a very explosive move. Another example would be, let's say we're trading the 90-minute cycle. We want to see that true session open below the true day open when we are at an extreme discount, and we want to see the true session open above the true day open when trading at an extreme premium. So if we was to form a 90-minute bearish sequential SMT while trading above the true day open and also the true session open, we could expect very, very explosive price action. So this is how to use sequential SMT and how to apply it to your trading. Sequential SMT should be the base of every single setup. Once it occurs, you can then begin to look for your entry model. But if we have no sequential SMT present, you should not be looking to do anything. For the highest probability setup, you should wait for a high time frame sequential SMT to occur, followed by a low time frame sequential SMT. So if we look at the example to the right, you can see on asset 1, we had taken out New York AM's low during the PM session. So this is a Q3, Q4 sequential SMT on the daily cycle. And then of course asset 2 created a failure swing on New York AM's low. So this means that we failed to take out AM's low during the PM session. So that will be our first stage of sequential SMT on that daily cycle. So now we'd be scanning for a lower time frame sequential SMT, which can either be on the 90-minute cycles or on the micro cycles. In this example, our second stage of SMT formed between Q3 and Q4 of the 90-minute cycle. So you can see asset 1 failed to take out Q3's low during Q4, and you can see asset 2 had taken out Q3's low during Q4. So that will be our two stages of sequential SMT, a daily cycle and then a 90-minute cycle. And then from there, you can begin to look for your entry model. We can use sequential SMT to spot manipulation within any cycle. So like we mentioned previously, whenever we have a sequential SMT occur, it will mark the manipulation for that specific cycle. So let's say we form a sequential SMT between Q1 and Q2. That Q2 quarter would be our manipulation quarter. And then from there, we'd expect price to trade away from that sequential SMT. Sequential SMT will also mark low or high of whatever cycle you are viewing. So if you're looking for a bullish day, you would want to see price drop down below that true day open, form a bullish daily cycle sequential SMT, and then you can then begin to look for your long setup after a second stage of sequential SMT occurs on that low time frame. We can use sequential SMT to anticipate what the next quarter will do. So again, like mentioned previously, whenever we form a sequential SMT in a specific quarter, we can then look for price to distribute in the following quarter. So as an example, let's say we form sequential SMT between Q1 and Q2. We would then anticipate Q3 to give us distribution. For the highest probability sequential SMT, you must see a closure and a wick. Now this means you must see a closure above the previous quarter's highest closure or lowest closure, and also a wick above the previous quarter's highest wick or lowest wick. So now we know how to spot and use sequential SMT. Let's get into how to anticipate sequential SMT. So the main way to anticipate sequential SMT is literally just by looking at the news calendar and which days and times the red folder news events are at. So if you look at both images down below, you can see a depiction of how a normal week would play out and which days the sequential SMTs are more likely to form on by looking at the red folder news events. So as you can see, we have no news on Monday, which indicates low volatility within the markets, which usually equates to the quarter accumulating. And then as you can see, we have a red folder news event on a Tuesday, being CPI, which is one of the most volatile news events. So using this information, we know there's going to be a lot of volatility within the market on that day, which means it's more likely that Tuesday will form a sequential SMT, taking out either Monday's low or high, and of course having one asset fail to take Monday's high or low. Like mentioned earlier, if we have a quarter manipulate, we would anticipate the following quarter to distribute. So like in the example to the right, we have Tuesday, it's giving us a sequential SMT between Monday, and then we have Wednesday being the distribution from the manipulation. And the distribution or continuation is confirmed once we see all assets taken at that previous quarter high or low. So in this example, all assets ran above Q2's high, therefore we have no bearish sequential SMT on the highs, which means price will not reverse lower. And then as you can see, Thursday, PPI, more likely that we're going to see a second sequential SMT within that cycle, which as you can see, we form one between Wednesday and Thursday, giving us our reversal for the week. And then once we see sequential SMT between Wednesday and Thursday, it's more likely than not that we'll see Friday just continue within the reversal direction. So again, Thursday manipulates above Wednesday's high, forming a sequential SMT, and then Friday distributing within the direction of the reversal. So you guys now know how to spot, use and anticipate sequential SMT. And if you don't already use it within your trading, I highly recommend you do so. And you will notice a huge increase within your accuracy and also your win rate. Okay, so now we have a few sequential SMT tips just to end off the video here. And these things are actually very important. The first one is try to look for sequential SMT in line with the higher time frame order flow, as any sequential SMT that opposes it will just act as a retracement. And what I mean by this is when you zoom out on the higher time frame, if price is bullish, I would only recommend looking for bullish sequential SMTs, because if we have a bearish sequential SMT form, you may be able to catch a small move from that, but essentially it will only act as a retracement to then form a bullish sequential SMT and continue back in line with that higher time frame order flow. In order to determine the higher time frame order flow, pay attention to the higher time frame cycles. For example, the monthly cycle can give you your weekly bias for anywhere around 1 to 3 weeks. The yearly cycle can give you a monthly bias for anywhere from 1 to 6 months. And the final thing is, if a sequential SMT occurs within a high time frame gap, it makes that sequential SMT a lot higher probability. Now price does not need to be inside of a higher time frame gap in order for sequential SMT to work, but for it to be most effective, it is better if it forms inside of that gap. With that being said, we're going to wrap up the video there. If you guys enjoyed the video and took value from it, I'd really appreciate a like and a subscription, and also comment down below which other videos you would like to see, whether it be quarterly theory concepts, models, trade recaps, or anything trading related. I will also be super consistent with YouTube, aiming to upload around once per week. If you would like to check out my other socials, I'll have them linked down below, as well as my own private mentoring group, and also my very own quarterly theory indicator. Goodbye and good trading.